Hey everyone, and welcome to another weekly outlook. I'll be going over my current trades that I have at the moment and how I plan to manage them, and as well new trade ideas that I'm looking to take on. 2026 has been full of headlines so far, so there is plenty to talk about. Fresh headlines bring volatility, and volatility of course for traders means opportunity. So without further ado, we'll go ahead and get into it, starting off with the COT report. This is the commitment of traders data here, and it tracks the latest buys and sells from big institutional players, basically all the big money that really influences the prices of these assets. We can see here just off the top of the list here, we have gold long-term getting a bullish reading, and that makes so much sense, right? There's a lot of geopolitical uncertainty going on. One of the fresher headlines for this week was US and Iran. In the beginning of the week, it did go ahead and escalate. Oil did catch a bid there. However, it seems to have been chilling out here recently, but nonetheless, we do see gold here getting a 1.39% positive increase. We have things like the pound and your currencies here as well, but one thing that I did start to notice is that we saw some rotation out of the yen here. So the yen really got a big decrease, minus 10% if you look at the bottom, and that's reflected in the USD JPY charts. Another thing interesting, the Dow and the Nasdaq did see some significant decreases. The Dow more than the Nasdaq. The Nasdaq's only down 1.3%, but nonetheless some things going on there. Euro, New Zealand dollar as well, as far as currencies, did take a hit there, so we'll go ahead and look at further. Speaking of the euro, Trump did go ahead and announce fresh tariffs on some European nations, the UK as well, Europe, Denmark, I believe, trying to go ahead and purchase Greenland. So those tariffs can cause a little bit of a depreciation in those currencies as we see the market open on Sunday. So I'll be looking to go ahead and look at that. As far as some data that we went ahead and saw this week, so CPI, it was at 3% and is now trading somewhat low here at 2.7. It's still sticky above our target inflation rate of 2%, but nonetheless, it is coming down in the positive direction. At the moment, the Fed is struggling with a couple things. It's struggling with the Fed independence. So we did see that the Trump indictment on Powell, right? So perhaps, in my personal opinion, not advice at all, not financial advice, but maybe the Fed takes a somewhat hawkish stance, not necessarily raising interest rates, but holding interest rates to go ahead and hold firm on Fed independence. And also too, it seems like inflation is taking care of itself. Another thing we saw here for the US was jobless claims. Now this is a weekly thing, it's volatile, right? However, for 4 straight prints in a row, we have actually been beating expectations, which is a good sign for the labor market. That's what the Fed is really worried about, and it seems like their focus was more pointed at saving the labor market. And so if we continue to see these improvements in the labor market for the US, perhaps the Fed can go ahead and be somewhat patient. They pushed back the March rate cut to now June, and so that's one of the reasons why dollar caught a bid. If we go to the top setups here on the main page, something I did see interesting, we are getting some dollar bullishness. So we have dollar Swiss here. We do see euro and the pound getting a neutral reading for the most part. These are all neutral readings here, but it's really interesting to see that shift. But nonetheless, interesting to see, given that before we had, euro, New Zealand, Aussie at the top of that list, and the dollar crosses at the bottom. Starting off with the dollar index here, the US dollar really did catch some momentum following some improvements in the labor market. We did have that NFP that did miss slightly there. However, the unemployment rate ticked down lower, which is an improvement. Jobless claims coming in pretty well, and it seems like the overall picture is looking pretty healthy here for the US dollar. So yes, the dollar was at the crosshair of the 50-day and the 200-day moving averages, and since then has traded above. And in my opinion, the path of least resistance for the dollar will be higher here to that 100 to that 105 handle. Not to mention as well, we did get some fresh headlines yesterday about Trump's new tariffs on those nations. If we just remember what happened in the beginning of last year, you had the initial 25% on Mexico, Canada, and China. Those currency crosses, the dollar performed well and the counterparts performed very poorly. I'm expecting some kind of a situation to that as well. So perhaps pound, euro is down. So we'll see how that plays out. Given that I'm expecting the dollar index to go ahead and trade higher here, I'm going to keep my current positions on. So I have 2 positions at the moment. One of them is a dollar Swiss long here, and I'm going to actually be looking to take profits or monitor price action as we get to this 200-day moving average. Also too, right, this thing has been trading lower. Although we are in this channel, this has been trading lower here. So perhaps, once we get up to that 200-day, it's same situation as well. Perhaps we get here and that dollar index is at that 100 handle. So that'll be a good place to go ahead and take some profits off the table there. Or if we just break above it, then I'll obviously target this level here, and we'll see what the fundamentals are looking like at that point. Pound dollar is a second position that I have on, looking to ultimately take profits here at that 50-day moving average. We actually traded below. We broke and retested here that 200-day moving average, something I like to see from a technical perspective. Also, UK was on that list as far as fresh tariffs go, so I am expecting a little bit of a dip here in the pound. Reason why I like this 50-day moving average, if I just put a Fibonacci from that low to high here, you have the 38.2, the 50, and the 61.8 moving average. And this moving average is right here in between this zone here. So once we get into these levels, if we do get to these levels, then I'll be looking to go ahead and take profits here, as longer term bulls will have a chance to go ahead and trade this thing higher if they win that battle. Euro dollar is pretty tricky, has been showing some relative weakness against the pound. If I do the same thing, take a fib from low to high here, we're actually at that 61.8% retracement level, and we have now tested that 200-day moving average. If we really breach this 200-day moving average and continue lower, again, euro was on that list as far as the tariffs, then perhaps we can flush down lower here and probably just get back into this level of support. That could be a fresh trade that I can take. And if we do continue to see, the fundamentals in favor of the dollar and overall dollar bullishness and the technicals look well, and if the whole tariffs thing do stick on these countries, then I can definitely see us revisiting here. The caveat to this whole new tariffs thing is that the Supreme Court ruling is still pending. So it was supposed to come out on a Friday, then a Monday, then a Wednesday, and it just keeps getting postponed. So perhaps the president, goes ahead and threatens all these tariffs here. If the Supreme Court comes out and rules against them, then these currencies can really go ahead and catch a bid. So that's something you got to be mindful of. Me, I'm already in 2 positions, so I don't want to add on to another position, especially if it's all going to be concentrated on dollar bullishness. So something to be mindful of, but we'll see. If the Supreme Court doesn't rule against tariffs and this thing continues to stick, then we can definitely see the euro dollar continue to fall further. But that's a very specific environment. Aussie dollar is a trade I'm still continuing to participate in. One of the viewers on the live stream actually said, we're getting some dollar bullishness. Are you still in line to go ahead and go long Aussie dollar? And I said, absolutely. In fact, I want to continue to see the dollar catch a bid there, because if we do, then we have an opportunity to go ahead and buy at a more discounted price. Right now, this level of support here at the 66500 level seems to be like a great one, but if we can actually fall further here, land at this 50% retracement level at the 6600, I think that would be a very solid level to go ahead and buy from. Previously, this was resistance here. As you can see, we broke above, tested it, and now has acted as support here. So ideally, this would be the level that I would really want to participate in for Aussie dollar. I've shown this chart here many times, but it's a chart worth looking at. And at the end of the day, interest rates are what move currencies, right? When we're talking about, seeing what the latest CPI report is, or GDP, or labor data, all that good stuff. The reason why we pay so much close attention is because we're trying to come to the conclusion of what the central bank of that country is going to do with interest rates, right? So interest rates are the backbone of currencies. Money flows into the higher yielding currencies. And so in case of the Aussie dollar here, the Aussie in blue and the US dollar in red, at the moment, the US dollar is the higher yielding currency. But as we go into Q2 of 2022 or of 2026, Aussie dollar will go ahead and become the higher yielding currency. And that's very bullish for the Aussie dollar. If you just scroll down here below, you can actually see that relationship start to flip here, better visualized at the bottom. Another chart here worth mentioning, dollar yen. It did have a lot of momentum behind it this last week. And of course, we saw that, right? We saw that in the COT report, that minus 10% change in the Japanese yen. It's no doubt that the yen's getting weak here, and it's actually getting very, very vulnerable. There's a lot of things happening in Japan as far as with Takaishi, and also a snap election that could be called on. Snap elections bring a lot of uncertainty, and those tend to weaken the currency. So there's a lot of things happening in Japan there that's not favorable. But one of the biggest things is Japanese intervention. So the Bank of Japan is looking to intervene if the yen depreciates very, very fast. And last week was a very speedy decline in the yen. We ultimately gave back some of the gains here on dollar yen, but still, nonetheless, we're getting into that intervention territory. Now, the thing is, the Bank of Japan is very secretive as far as they don't share dates, they don't share details, they very much act in surprise. And so that's the thing that we have to navigate, is once we get into these elevated levels, you have the risk of them intervening. So there's no firm levels, but everyone kind of monitors the 160 and the 162 handle. We're pretty close, or we got pretty close. Also, we do have MLK Day on Monday, so US equities and bond markets will be closed. The Bank of Japan does like to intervene in low liquidity environments because they get better bang for their buck. The only dilemma is that the intervention itself does not create the follow through. So you need to have the fundamentals in line, because the intervention, I say, is like putting a band-aid on a gunshot wound, right? So you want to make sure that you have everything taken care of, and you have the momentum that's going to favor the yen. And at the moment, you have that uncertainty with the potential flash election. One thing that they do have, though, the yen does have to their advantage, is that they're actually, they're having some sticky inflation. I can show it to you. Inflation in Japan is elevated here at 2.9%, and they have talked that next week, and I believe the day is the 23rd. The 23rd of January, Bank of Japan is looking to go ahead and hike their interest rate again. So we'll see how that plays out. If we continue to see a hawkish Bank of Japan, then of course that intervention will make a lot of sense, and that hawkish narrative will definitely guide the yen in the right direction. What you don't want is for the Bank of Japan to go ahead and intervene, and the fundamentals are still ultimately weak for the yen, and then the yen continues to go ahead and depreciate, and so that intervention was useless. A chart worth ending off on here is the US 10-year yield. This acts as a meter to how the markets really view interest rates, and the US 10-year yield did catch a little bit of a bid here on Friday. Actually broke above this level of resistance that I had marked up here, and it's not that 200-day moving average. I'm curious to see how that continues to go, but the baseline is, if you continue to see higher yields, then the dollar will continue to follow in that direction as well. The dollar and yields tend to flow in sync. I would recommend we all look at this chart here as far as getting guidance on dollar direction. So I'll continue to monitor my dollar Swiss position. I'll look to take profits here at the 200-day moving average. If we break above, then awesome, I can just show stops. I'll actually put my stops here below that 200-day moving average, as it'll most likely act as support. Seek to take profits ultimately if we end up getting here at the top of this channel. Pound dollar as well, we are now below that 200-day moving averages, so stops are moved lower, and I'm looking to ultimately target that 50% retracement level here. If we see the tariff talk continue to escalate, I can see more depreciation in the pound and the euro, but I won't be taking on any new positions on those two crosses. As for the Aussie dollar, I would actually like some continued dollar momentum to the upside, because then I can ultimately get a price here at the 50% retracement level. The fundamentals look fantastic for the Aussie dollar trade, so I'll be really excited if I can get an opportunity to trade it. And that's it for this week's weekly outlook. Thank you guys so much for watching. I truly appreciate it. Have a blessed rest of your day, and as always, trade safely. Bye bye.